Alright, what's up guys? I'm gonna get the tweet out real quick, as always, and then we'll get this started. What's up everybody? And let's see. We are doing this 3 hours earlier than typical because there is an air show going on and I live right by the Air Force Base, and the Blue Angels are freaking loud. So it's not even worth it to try to compete with that type of background noise. So hopefully doing it now will make it so there's not too much background noise. Granted, I've got, you know, the air conditioner running in the background because we're in sunny Southern California and it's pretty hot here. So hopefully the background noise from the air conditioner isn't ruining it. We'll see. I know I'm also competing with Sunday football right now. It is what it is. Chiefs are playing the Colts, so I'm not really worried about my team. I would like to watch the Dolphins game, though. How are you guys all doing? Have you guys had a good weekend so far? You guys ready for this week ahead? If you guys could do me a solid, please retweet the tweet I put out or share it on Instagram or on Facebook or wherever you guys have anybody following that might be interested in markets. Try to get as much attention on these as possible. Click the like button, please. Even if you think I suck, please still click the like button. I don't care. Turn on them notifications too, because there are from time to time there are situations where we go live a little earlier or maybe later, or maybe it's a 3-day weekend and I do it on a Monday. So if you guys have the notifications turned on, you'll always get notified when we are going live. And I'm going to keep this one short and sweet this week. It's just going to be a continuation of last week's topic, and not near as many ideas this week. I wanted to make it so it's not, you know, I don't want you guys to be overwhelmed with the number of ideas. It's sometimes, well, not sometimes, but often, it's always about quality over quantity. And, you know, I can give you 20 ideas, maybe only 3 of them play out, and you have to understand what to look for to see those 3 as the opportunities. I think there's like 11 ideas this week. We'll see. I can't remember the exact number. What's up, Cook? All right, guys, we'll get started. I doubt there's going to be a ton of people watching the live stream with football happening right now, but if you guys don't have a broker you can trust, check out Cobra. I'm telling you right now, my favorite broker by far, and I've used them all. I still have accounts at tons of different brokers. These are the only guys I trust on a day-to-day basis. And seriously, in this industry, when it comes to brokers, the most important thing to me is customer service and the ability to be treated the right way by your broker. These guys are them. There's a link in the description. It'll give you 25% off your commissions. It'll also give you a month free of whatever platform you choose. Check them out. Spike Heat, these guys created a platform that allows you to pull historical stock data so you can back test an edge that you think you may see in the market and make sure that you actually have numbers to justify a setup that you want to trade, right? And we used to have to do this manually by hand. It took a lot of time. It was a pain in the butt. These guys have basically made that tedious manual labor aspect of my life into a very happy breeze, walk in the park, snap out of fingers task. Check them out. There's a link in the description for them as well. Scripts to trade. These guys create indicators and tools for Thinkorswim and TradingView, and they just released. They're just moving now from a kind of an a la carte style of providing products to people to now it's a subscription-based service where you get the whole suite of indicators, right? I think there's 13 of them that you get for a monthly subscription fee, which if you guys have never seen some of the tools they have created, you're missing out. If they don't have a tool that you think you want, they can work with you one-on-one and create whatever kind of indicator or tool that you can dream up. Check them out, guys. TraderView, make sure you guys are using some product out there to track your own performance metrics. I trust these guys. I love these guys. They give you free access to their software for if it's just 100 trades or less per month. There are some bells and whistles you can pay a monthly subscription fee for. Check them out. There is a link in the description to them as well. Traders for a Cause is this coming weekend. Starts Thursday, runs through Sunday. I will be out there. If you can't make it, I know it's all sold out, but there is a way to watch a live stream of it. Yours truly will be speaking on a panel, on 2 panels actually on Sunday. One of them is with, I feel like I'm going to forget some names here, but like I'm on with Kim Ann Curtin and Brian Lee and Shay, the Humbled Trader, and that one I think is moderated by Sang Lucci. And then there's another one I'm on with, I believe, Alex Bustos, the Be the Story. He's I believe moderating it, and it's probably, I think it's me and Jack Kellogg, and I'm trying to remember who else is on that one. But there's sure to be amazing content that comes out of this event. There always is, year after year. And if you can't be there, then you can watch it live by going to projectimpact.org, I believe. I know Raul will post a link to this in the chat right now, and I'm sure we can get a link in the description of the YouTube as well. But if you go there, I think it's like $299 for a year, and you get access to all the content that's ever been created through the Traders for a Cause organization. And that means the COVID jam they did during 2020 when everyone was locked down, all the other previous Traders for a Cause events. It's amazing. So check that out. And keep in mind that I'll be there in Vegas till Sunday, so there may not be a Sunday prep this following weekend. So maybe you guys can use this as an opportunity to test out your skills that hopefully you've been, sharpening that Ginsu blade every week by watching the way I create these Sunday preps to create your own. And I highly recommend you guys do that every weekend anyway, but now it's kind of going to be like you're forced to, right? I may try to put something out, maybe just a watch list or something, but I will not be able to do the full-on production that we do every weekend this coming Sunday. And here are some earnings this week. I see Nike on there and Micron. There's a few others, but again, slower week in the name in the scheme of things when it comes to earnings, but there are some, so make sure you're aware of them. All right, so let's, again, just like last week, I'm going to do the disclaimer first because the topic is going to revolve around the broader market as well. And so let's just do this real quick. Guys, neither True Trader, I, or any of our representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about today is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right, so I guess let's get into it. This is the ES chart. Now, last week we were talking about when you can justify anticipating a turn, right? And it always revolves around knowing which time frame's in control and where we're extended, where is balance, and where are we at levels of imbalance. And last week we had the FOMC on Wednesday, middle of the week, right? And so the whole topic last week was anticipating a higher low on the monthly time frame, right? Let's look at a monthly chart. And obviously this is all left over from last week's Sunday prep, right? This risk reward thing I put out here for you. And look, we have come quite a bit lower than where I was willing to get ready to anticipate. And the whole idea we were talking about last week was if this is going to make a higher low here, the risk reward is phenomenal, right? We can be wrong. If we take trades where we're getting 5-1, 6-1, 7-1, 10-1, right? We can be wrong so often and still make money in the markets if they're legitimate times to anticipate, right? So by definition, anticipating a turn in the market versus waiting for confirmation, you are going to sacrifice win rate in order to have that higher risk reward. But there is a way to do it where you do get better probabilities that you're going to be right while anticipating. And that's kind of the secret, right? Like, how can I get that really good asymmetry in the trade, but also still kind of stack the probabilities in my favor? And that's kind of, we didn't really get to that last week. Last week, we mostly focused on when it's okay to anticipate, which is, at least we have lows that we're risking against. At least we see that the time frame and control can still be looked at as the monthly, looking as though it, this can still be looked at as an uptrend that has pulled back, reset into the monthly 20, has pushed up, and we're either going to put in a lower high here and roll over and head lower, or June's lows are the lows, and this will end up making a higher low here, which will eventually get back over August's highs, and we can resume the uptrend. So as far as when we can anticipate, one, we have to acknowledge that there was absolutely no way in hell that it was going to be smart to anticipate this being a higher low prior to the FOMC event, right? You could have been buying Monday and Tuesday and Wednesday morning as we came lower, and just you were walking into a binary event, which is literally a crapshoot at that point. We could have ripped higher, and you could have looked like a genius, and actually reinforced bad behavior, bad discipline. And this typically happens when you're rewarded for something that you shouldn't have been rewarded for, or you could have got smoked, and it was completely avoidable, right? So prior to the FOMC decision, there was no reason to be anticipating anything, but there was the ability to know that as soon as this binary event is in the rear view, then we can start to say, okay, are we going to make a turn here, or is this look like it's heading lower? And so I want to just take a glance into I want to show you guys something. Let's see. Here is your FOMC event. This is a 20-minute chart, okay? And this is, I'll zoom in a little bit. This is Wednesday, okay? We had the initial sell-off, and we knew that this event was coming, right? It's a forward-looking event that we know is coming, and so we had the ability to prepare. And like at True Trader, you guys, if the guys that are in True Trader will vouch for this, and if you're not, you'll have to take my word, or the people in there will tell you. We prepared for it. We said, look, there is the ability to create if-then statements, right? If this sells off and the first move down is a head fake, there's going to be certain stocks out there that are set up to buy the dip with really defined tight risk. And if this then pushes higher, we can have that anticipation trade that we discussed last Sunday put on. And we, some people in the room took advantage of it. I personally, the only stock I actually bought on this sell-off was Microsoft. We talked about it in the room. I believe the level was 241 or something. 241 versus 239 was what we were looking for. So let's see. Here's your Wednesday sell-off. This flush into 241, we were risking Tuesday's lows, okay? So, that was the ability to buy on the flush with really tight risk. And if this had a turn, if this had have then kept on going, we could have had that anticipatory trade put on for the bigger picture. But it doesn't mean that, all risk management goes out the window and we completely ignore everything else at that point, right? Because look what happened. We had the big rally and then it stuffed. And this is never something you want to see. You don't ever want to put on a trade that, especially in a bear market, keep this in mind, guys. Anytime in a bear market, and we'll see some examples of this later when we get into the prep. Anytime in a bear market where you see a stock breaking out to some new highs, you see like we had this channel here and it's breaking up. For it to then immediately slam back down, basically creating that failed breakout, is always a huge red flag, especially in a bear market, because that is, everybody wants to make sure they don't miss the bottom, right? So when they rush in to buy those breakouts, they all get bagged. So, even though I had put this trade on, I stopped out. I took a small loss on it, and it was well worth every penny. It was one of those losses that, you know, I tend to always say shooters shoot. That's what they do. When you're presented the opportunity, if you want to be a trader, you got to take your shot. And this was that. And it doesn't matter if I'm wrong. What matters is that I take that trade 100 times out of 100 and I come out positive on the other end regardless, because eventually the asymmetry of those trades plays out in your favor. Let's get back to the ES, because I want to keep on track here about the ability to anticipate. So once we rolled over lower, at that point, you know, it doesn't let's go back to the week, or this is the monthly. Let's look at a weekly here. At that point, right, when we rolled over, you get that stuff, we come in, actually this is a weekly, so it's this candle here. Until we take out June's lows, we are still possibly putting in the higher low. Now, granted, I don't think it's that good of a look to really come this far back in, right? Maybe they double bottom. Maybe we just have a little failed breakdown, reclaim right away. But whatever the scenario that plays out, if this is going to put in that higher low and then we're going to turn and head back up above August's highs, you are never going to see something as asymmetric as this possible in terms of the bigger picture, right? This risk reward here that I've got drawn out, let me go back to the monthly. This was from last week, right? And this is giving you 5-to-1. If your target's all-time highs and you're trying to anticipate the turn, well, look at where we're at now. If you're looking to play against last week's lows, you know, even where we closed last week, right? Where we closed, if we were to be able to get long from where we closed on Friday versus June's lows and your target's all-time highs, you're now getting 13-to-1. So it doesn't get much more asymmetric than this in terms of bigger picture ability to put a trade on and not worry about being right or wrong, because you're okay with the win rate being low while the risk reward is stacked in your favor. Now, what I wanted to point out was that even though we might be anticipating, what we still need to see is on the lower time frames a setup, a valid setup. We're not catching a falling knife. We're not buying this as this is just flushing down. Now, granted, this was a valid long trigger after the FOMC when they made that big flush and then we spiked up, which is why we took that. Or at least I personally looked at that as the opportunity to put the Microsoft trade on. And I know a lot of other people were putting other high beta names on in anticipation that this was where we would go from. But since then, since that happened, it has been nothing but lower highs and lower lows and a controlled downtrend. So there's been zero, I repeat, zero situations where you had a valid setup to get long the rest of the week on Thursday or Friday. So until we get one of those setups on a lower time frame, then we don't have to be looking at a 20-minute. I'll show you. Here's a 2-hour chart. Now, what I like about the 120-minute chart is you can see we are still extended from the 120-minute 20. So we can actually use something like a 20 or a 30-minute chart and look for a turn, look for a valid reversal setup. And if you don't understand what that means, one, maybe you haven't been watching the Sunday preps for long enough, because we've definitely gone over what needs to happen for a stock to reverse. Or two, you just don't understand the fundamentals of what must happen in order for a stock to go higher. And the only way for a stock or an index or a commodity or a currency or any trading vehicle to go higher is to first make higher lows and higher highs. And it always starts on the lowest time frames and dominoes its way up, right? So if we're extended on the daily chart, which let's go back to the daily and I'll show you. Look how far we are from the daily 20, okay? Obviously, when we pushed up into the daily 20, we were talking about that in the Sunday prep as that's your opportunity to probably be getting positioned short, because that's where we're gonna find resistance. Well, now we're really, really extended to the downside, and very much so, right? Like Friday's candle, until that rally at the end of the day, was very ugly looking. And we were kind of like theorizing, like, you think we break June's lows today on a Friday? Like, it could have got pretty ugly. They saved it, they stepped in, and now we have the ability to stalk a long setup on the lower time frames, because if this daily chart is going to bounce, it's going to take a while. It's going to take at least a few days to see higher lows on a daily chart. But you're going to first see those signs on the intraday time frames. And we already know that we're extended on the 120-minute time frame. So we can watch for a setup on the 20-minute chart. You can literally watch for this to reclaim the 20-minute 20, start to push, and on pullbacks, on dips, you're going to want to see higher lows and then for us to hold and push. It doesn't guarantee you that it won't be a failed long setup, which will then roll over lower, but it tells you at least you have reason. At least you have a valid setup where you have defined risk. And so basically you're looking for that micro setup. And the reason it's not really a micro setup to be looking at a 20-minute or a 120-minute chart, but in the big scheme of things, when we're talking about spotting a reversal on a monthly time frame, and you're now zoomed into intraday time frames, that's micro, right? Micro versus the big picture. But we're trying to time the turn. And as a trader, I can't tell you guys how important it is to understand the ability to spot the turn, identify it, and then know that you could be wrong, but at least your risk is defined. So this coming week, like, I still have the desire to be spotting this turn, to be looking for a valid long setup for the bigger picture trades, right? So, and we'll talk about a lot of them, right? Because we're going to get into the ETFs, so we'll look at those. Because I remember, we talked about the financial sector last week. There's a lot of names from last week that were on that list of special situations where they got to levels where I'm interested, but they haven't given a setup yet, right? So if you're like wondering, I wonder if Ricky got long JPM or Citigroup. I didn't, because there hasn't been a setup yet. But that doesn't mean there won't be, and it doesn't mean I'm not still stalking them. I am, but I need to see a setup first. You can't just be buying as it's flushing without risk defined. Now, I know there's the argument you can make that your risk is defined. It's June's lows. But why step in front of a freight train when you don't have to? You can wait for the author, price, to start to show you your ideas right on intraday timeframes first. And then you can start to get much tighter risk, right? Like, even if you were buying Friday's lows, like let's say you were buying this into 67.70s, right? And your risk is under 66.39. That's still 40 points of risk on the ES, right? And plus, you're going to need it to break lows convincingly and then stuff a retest to really confirm that you're wrong. But if you're using an intraday time frame, and you see this bounce right here that we had on Friday, right? And this is going to be the theme for the coming week, at least for Monday and Tuesday for me, is I want to get long versus Friday's lows if I start to see higher lows. So you're looking at Friday's lows were 3660. It's 3660.25, but I'm going to call it 3660. Let's say Friday's lows are 3660. And now I'm getting the ability to possibly get long on dips with about 20 points of risk on the ES, right? Now, granted, I'm not trading the ES, but I'm watching it for a turn. And I've got names on my watch list this week that also will possibly lend themselves very well to spotting this turn versus using June's lows. There's a huge difference. Now, if I'm wrong with this tight risk, we go right back to stalking as long as we're still above June's lows, and we continue to watch for the turn. But until you see it, you can just be hands off, no risk, no money on the table. It's so much better to sit there and wish you were in a trade than to wish you weren't. That's probably like one of those things I wish I learned much, much earlier in my career, right? To the ability to be okay with missing, but to know that it's better to be out and wish you were in than to wish you were not in because you're upside down or it was an avoidable loss. Now, I wanted to make one more point about this, and that is, regardless of the bigger picture trade, regardless if we break June's lows or not, let me get back to this. Let's look at a daily. Okay, regardless if we break June's lows or not, this kind of move down still is very, very high probability of a bounce, even if we break June's lows. And like I've said it a few times, even if we break June's lows, it could very well just be one of those quick flush out failed breakdowns that reclaims. And the further down we go without any significant bounce, the more I get excited about the long opportunities for day trades, right? So remember, make sure you know what your business plan is, because I day trade every single day I show up to the market. I wear my day trader hat, but I also have a hat I wear for watching for my longer term portfolios, which have been cash for a while. And until I see what I need to see for that, there's no need for me to get involved. But I can still come to the market every single day and take a paycheck and just trade the markets and go home cash at night. And this chart right here is so extended to the downside, right into key levels. You know, having that kind of bounce into the close on Friday really lends itself very well to some long setups for day trades. And you know, if we bounce right back into resistance and have a big rally, there's going to be some really good short day trades as well. So that's really kind of, I know like this happens every Sunday. I get, you know, I shut down the live stream and I, you know, go get a drink and start to think about all the stuff that we just talked about, and it never fails me. There's always something I forgot, right? So I know there's probably something I'm forgetting. Maybe you guys will have questions that you can throw in the chat or whatever. But you know, the main point I want to make is, even though we're looking to anticipate June's lows being the lows and that we're not going to go lower, and it's not, I hate to say it that way, right? Because I am very, very well aware that we may lose June's lows and this bear market could really, really unfold much further to the downside. And that's fine. But when there's the ability to have this kind of asymmetry in a trade idea, I'm willing to put some capital at risk to see if I'm right, because the payoff is worth it. But the main point I wanted to make this week versus what I talked about last week is, even though that's what we're trying to do here, you still need a valid setup, and there hasn't been one. So it can as long as it keeps flushing, it may just break right through June's lows and I may never have put a trade on, because there hasn't been a setup. Wait for a setup, and remember, use the higher intraday time frames to know what to look for a turn, so that you can still, you know, you don't, I mean, you can theoretically just sit here and wait for, on the daily chart, to see higher lows, right? We could wait for a setup like this where you push up, pull back, make this higher low, and then now we're risking these versus these, right? You can do that if that's your style, right? If you need to have a bit more confirmation. But I know that you don't get a bounce like this where you get the higher low on the daily chart without first having intraday long setups where you get these reversals. You can't have stocks on a daily chart go higher if the intraday time frame's still making lower highs and lower lows. So know how to spot the turn and set your risk. That was really the difference that I wanted to kind of, the nuance from last week's talk to this week's, okay? So let's actually just talk about the levels. Let me throw on the one with the pivots. Look at it intraday, and let's see. For support, obviously the first, like I said, guys, I want to play against Friday's lows as my first level of support, right? So, and I will mark these, or I'll set these alerts later tonight. But I'm going to be playing against Friday's lows as the first level of support, and then below that is June's lows. We're that close to June's lows that there's really no other lines in the sand down there to play against. Now below that, I do have a level marked out, which is lines up pretty much with last month's monthly pivot, which is we'll call it 3580. I'll zoom out a little so you can see where that line came from. 3580, I would consider a level of interest if we do break June's lows. Now, as far as levels of resistance to the upside, depending on where we open, right? I kind of get the feeling we're going to gap up, and if we gap up, I'm not chasing anything, guys, because those Monday morning gap ups oftentimes just get all the FOMO buyers in there, think they missed the bottom, and then it just flushes them all out, right? So if we gap up, I'm looking probably for Friday's closing prices as the first level of interest, and possibly even lower. Remember, I want to play against Friday's lows. But there is, some levels like intraday. I would say this 36.75 level is a bit interesting, which is quite a bit ahead of that 36.60 level. But as far as resistance, if we were to gap up, and we're still quite a bit of ways away from this level here, I'll draw it out so you can just see it. This level here definitely would have my interest for resistance. Lines up with last week's weekly pivot, 37.70 we'll call it. Then that next level is going to be right up into this monthly pivot area. 38, let's just call it 38.40, and then the 20-day. Okay. Granted, and I shouldn't have to say this. I say it every single week, but 4,000 is a big level for me. It's the psychological level. You have the annual and the quarterly pivot up there as well. And the 50 days kind of hovering right above it. So those are the levels I'm looking to play against on the ES. Let's move into the NQ. Again, everything we just talked about with the ES still applies to the NQ. I want to play against Friday's lows. Friday's lows is the first level of support I'm looking at, then June's lows, and then we do have some levels a little bit below that. Just call it 11K, psychological round number, and then this, we'll call it 10,650. Okay, and it's not very accurate because I'm zoomed way out. I can try to see what these levels are. Yeah, we're gonna call them 10,650 on those. Those are the levels to the downside. Friday's lows, June's lows, 11K, and then 10,650. And then for resistance, this 11.5 area, right up into this 11.780, and then obviously these levels up here around 12.1, which is also going to be your 20-day, and then the 50 days the next level. Again, I don't know if we rip that high. I'm really more looking at the support levels, right? I don't know what's going to happen. We may gap up and start to rip and have a bunch of FOMO chasers come in. But again, if that happens, I'm not chasing. I want things to flush out and settle first. And then I can reassess if I think that Friday's lows are, never going to come into play. Or if I think that we still can really get a test, like one of those gut checks, right? Flush everyone out, make everybody think we're going lower, and then start to hold some levels, right? Bitcoin. I actually need to go to my main web. Bitcoin. Let's see what we're doing here. I haven't looked at the Bitcoin chart for a few days. Still just going sideways. Doesn't surprise me. Channeling. Remember we talked about the fact the weekly 20 is catching up. Right now it's lining up right with the weekly 200 as well. So you really can kind of look at any kind of pops back into that 22,750 area is pretty good resistance. And if we break these lows, watch out below. Nothing's changed on my views on the Bitcoin chart. All right, let's get into the sector analysis because there are a lot of things I kind of wanted to touch on in there. Let's look at the barchart.com real quick and check out that matrix. Oh, there's going to be a lot of blood in here, right? Everything's red. Again, staples, remember how we use these, right? Like just because something is red doesn't mean that it's not a long, or just because something's green doesn't mean it is a long. You still got to look under the hood, right? So, in a all red tape when everything got smoked, kind of want to look and say, well, what got smoked the least, right? Consumer staples. That kind of makes a little sense. Healthcare and utilities were the other two. Everything else pretty deep red. Now, energy and oil we'll definitely talk about. We started to talk about that last week. Real quick, just in keeping with the theme from the opening topic, right, of anticipating a higher low, a turn in the market, the end of this downtrend that we've been in, and what I was trying to kind of focus in on was using intraday time frames to see when we're going to make a turn, or at least have a valid setup. One of the things I do is these are eight of the different sectors, right? There's a few I keep out because I don't trade them very much. And obviously TradingView only allows 8 charts on any screen. But so, we got the retail, financials, discretionary, staples, tech, communications, health, and bios, right? And you can see clearly these are all 120-minute charts. And the reason I have it like this is that at a glance, I can literally just glance at this and see these are all black and white, objectively just downtrending. Lower highs, lower lows. And you're going to see it very, very clearly when that changes. When these things push, the first thing they're going to need to do is push up into these 120-minute 20s, which is, if you guys don't know, it's the white line on these charts. And once that happens, every time we've pushed into them for the last few attempts, we end up heading lower. And that's how stocks trend, right? Push up, new lows. Push up, new lows. So as long as that's happening, these can't reverse. It's just not possible. But when they finally push up into those levels and then pull back and try to make new lows and fail to, and then push again and break the highs of where they had just pushed, then we're starting to see turns. And when you start to see them, one, you can spot which sector is the stronger, which sectors are weaker, which ones are lagging. And this is a real quick and easy cheat sheet to use to be like, look, are we starting to turn? Are we starting to see some bottoms on intraday timeframes? And if so, what sectors? Which ones are leading the way? And obviously couple that with your ES and your NQ and start to look for signs that instead of making new lows every time we push up, then instead we are starting to hold firm and spot the turn. Because as a trader, your job is to identify the turn and then play against it. That's it. So just wanted to show you that quick little cheat sheet thing. And it looks really, really crowded on my screen right now, but I want to show you guys something. Because this screen I'm on is a 43-inch monitor, I have to enlarge the charts so they're visible to you guys. But when I zoom back out, now things look much, much more readable to me, at least, which they probably look too squished up for you guys to see. So just so you know, that's not what my charts look like while I'm trading. It's just for when I do these live streams, right? All right, so let's get into each ETF. And so keep in mind, all these had red weeks, and they're all kind of testing lows. Now, some of them have made new lows, right? That's showing you relative weakness. Some of them have held in fairly good. That's showing you relative strength. So make sure you're kind of looking at those. Retail, if you ever were going to anticipate a turn, this is as asymmetric as it gets, right? Look at that Friday candle. So if you guys have names in the retail sector you're watching, watch for Monday morning for any kind of flushes versus Friday's lows, because as long as this puts in a low here, you have a lot of upside for a bounce, and you have very, very defined risk. So this looks very asymmetric to me in terms of where you could generate long ideas. Now, financial sector. This is the one where, if you remember, we talked about it last week. I liked the way it had been behaving. That's kind of one of those things you've heard me say a lot. I just feel like it's really, really holding these key levels. I personally, and this, I don't know if I'm going to be wrong or right, and I'm at peace with the outcome, but personally, when I think something's behaving well and has good strength, I wouldn't expect it to come this close to these lows, right? Like XRT did, but XRT wasn't one of those ones that I felt like was behaving that great. For this one to give up that much of the levels that it had been holding and come all the way down to these lows really makes me want to kind of reassess the relative strength of this sector. I still think you have a very, very asymmetric trade setting up here if it does hold, right? If Friday's lows are the lows, there's still, just like with XRT, just like we just said about the retail sector, you have just as asymmetric a trade setting up here versus Friday's lows. But I'm not as in love with the bigger picture idea until I see some other things happen here. Because I just wouldn't have thought it was going to come down quite this far. It is what it is. Real estate got smoked. It made new lows, right? And this is what we're talking about. This is relative weakness. Completely just blew out the June's lows. But again, as far as day trades go, you still got to look at these types of things. Like, I wouldn't get short here, that's for sure, because there's at some point things can't go any lower without having that bounce. I talked to a lot of people in terms of trying to explain this in a way that makes sense. And a friend of ours at True Trader had given this little monologue about a year and a half ago when he was trying to explain it to a pilot. And I thought it worked beautifully. He said, look, you're a pilot. You know how planes work. A plane can only climb to a certain altitude straight up for so long before it stalls out and falls back to earth. And the same thing applies to stocks. It's just like physics, and it works to the downside the same way. You can only go straight down for so long before it has you run out of sellers and the buyers are stepping in. So you're going to get that bounce. Now, I don't know if Friday's lows are the lows, but at least your risk is defined. And again, it's not one of those sandboxes I play in a lot, the real estate sector, but there are a few names that I would be looking at. And I do think the lower this goes without a bounce, you're crazy to be getting short. Now, trust me, I know what I sound like right now talking about wanting to buy or get long anything to do with real estate right now, because I know the sentiment is so negative out there about real estate. But guess what? That's what makes the best longs, is when everybody is so negative. So when you hear everybody being like, oh my God, real estate, this bubble's about to pop, it's about to get real ugly. You know, when you hear the Chicken Little and everybody, you need to be ready to start buying stuff, because the herd is more often than not going to be wrong about that timing, the timing of it. They might be right in the long run, but when everybody piles in on one side, you want to be on the other side. Now, this one, was it this week? Yeah, it was this week. Lost those levels we had talked about, right? We had been talking about this 124 level for so long. Now that we're below it, I really do think we're coming to test these June lows here. And if those don't hold, remember, we keep talking about this. In a bear market, eventually all the sectors are going to get hit. If the bear market were to end, if this is just going to be a 2015, 2018 type correction, then maybe we put in a higher low here and we never take out June's lows in the healthcare sector here. If this is going to be a 2001, 2009 bear market, June's lows are gone, right? And this will eventually get smoked. But we got to wait and see. Don't be getting ahead of things. Building sector or materials lost June's lows straight down. Again, you're crazy to be getting short in the hole like this, because you're just going to have it blow right back in your face. If there's names in this sector you trade, right? If you want to get short because we're in a bear market and this thing's weak and it keeps making lows, wait for the rally. If you want to get long versus Friday's lows. Okay, I mean, it's simple. Risk is defined. The trade's asymmetric. That's it. And same with industrials. Okay, same thing. Utilities really got smoked. Remember, we talked about this failed breakout up here and then it rolling over. And again, remember what I keep talking about with these failed breakouts in bear markets. It's been the money setup, and I'm going to point a few out when we get into the individual ideas. I swear, I feel like we're a bit late in the bear market for me to have just now had this kind of aha moment. I just started noticing them maybe a month or two ago. But there's if I'm trading long enough to experience another real bear market after this one, this is going to be something I go back to in my notes and go, oh my God, that's the play. Okay, and we'll talk about that later. But we are right back down into this trend line that we had broken out above, so you could look at it as a retest, and also into these key levels, right? You see I have this purple box that had been drawn. We can just extend it out. We're right into those key levels. So this is probably a good area for utilities to bounce if you want to play something like Duke or what was the other one I always play? I'm trying to remember right off the top. It doesn't matter. Again, this chart, out of all the other charts or sectors, other than maybe energy and oil, has been one of the ones that has held up very, very well, mostly because these things do perform better in late stage cycles and in when markets are in bear territory. But so if you wanted to get long, again, versus Friday's lows, you're going to hear that a lot. Versus Friday's lows, guys. Your risk is defined. We had that rally. If we gap up, don't chase it. Wait for flushes. Wait for it to flush out. Wait for it to settle. Staples. This is the one where, I think that I like names in this sector because staples are always going to perform pretty well even in a recession. Again, versus Friday's lows, I think it's an asymmetric trade, but I still think there's a lot of short ideas out there in this sector too on any kind of pops back into 72. I do want to make sure I'm always looking at both sides of the coin, right? Even though I think there's a lot of long trades setting up for day trades, any kind of rallies, like we can go back into any of these sectors I just talked about. I don't know what just happened there. Sorry about that, guys. I didn't lose the live stream, did I? No. Okay. Let me get back to staples. Yeah, I can go back into any of these sectors we just talked about, and we could talk about the rally too, right? Any kind of rally into 62 on retail, and I'd be looking to fade things, right? So even though I'm looking long because we're so extended to the downside, don't forget about the short setups when we have a rally, okay? And the same, like that goes for all of these. Communications made new lows, still ugly. This is one where you won't catch me. I don't want to use. I don't want to say you won't catch me longing anything in the sector. I do like Pinterest, but other than Pinterest, the sector is nasty. This is a very, very weak sector. Has been this whole bear market. Eventually that will change. Keep in mind, guys. But wait for the overall market to show you that it's bottoming, right? Like, we're talking about anticipating the turn in the market. Look into the sectors that have the strength first. Don't look to these ones like communications first. Wait for the market to be clearly, definitely back into bull market territory, higher lows, higher highs on higher time frames before you start looking at sectors that have just been this weak. Biotech's lost that really important level. Still going to retest another level that should hold is 73.80s. And not because, hopefully you guys understand, it's not because of this pink line, right? It's nothing to do with this pink line. There's everything to do with the retest of this long trigger. So here was the long trigger, right? The low, the push up, the higher low, and then the break of this level. So actually it's not even 73.8, it's 74, what was it? Let's just draw it. Basically Friday's lows, right? That was the long trigger that gave us the ability to reverse. And we're just now retesting it, okay? So retests of breakout levels are always key inflection points for me. Doesn't mean you have to step in front of it, but you have defined risk versus Friday's lows if you like names in this sector. Tech got really weak, and tech, the only way I'm looking here now for an anticipation trade, meaning the bigger picture that we had talked about, is if this was just a failed breakdown. If we go back under 122 in tech, all the ideas from that bigger picture special situation thing we talked about last week are out the window. Because, you do not want to see us trading under 122 and then butting our heads against it every time we try to reclaim. We need Friday's lows to be the low on this sector if there's any chance. And to be honest with you, the probabilities of us actually putting in a turn in this bear market and heading back up really are going to be heavily centered on Friday's lows on this sector being the lows, right? If this doesn't hold and we do roll over, think about all the names in this sector. Think about all the names that are tech stocks and the weightings they have in the indices, right? Like, Facebook, Google, Microsoft, Apple. If those all start falling apart and this starts rolling back over, what do you think's happening in Nasdaq and S&P, right? So Friday's lows on this sector are very, very key to hold. Now, energy and oil, the thing I wanted to talk about them is a continuation of what we talked about last week, and that was, we were already saying, I think this is getting kind of weak. One of the things we talked about was when we had this big speed up and the way it sold off, that speed up was the first time that this bull trend had really gotten emotional and a bit ahead of itself and kind of, a bit out of control. And it paid the price for doing so. But now we're struggling to reclaim. We're struggling to get back to productive price action. And we're actually flirting with breaking that trend line. I actually think maybe energy and oil are teetering on the brink here of rolling over and losing some key levels like we had talked about when these sectors finally lose these beautiful, beautiful uptrends that they've had, it's going to be obvious, right? So I honestly am not, you will not catch me trying to get long energy and oil names until they prove themselves, right? So like the fact, I see, trust me guys, I see us holding this trend line. And I see that every time we've come down here and tested it so far, it's been a beautiful opportunity to get long. But I'm just losing trust in it, right? And this is why. It was this move up here that makes me not want to trust this anymore. Even though this happened after that, I just feel like this is kind of like building you up to let you down, right? Anything under this 107.50 area on oil, and I'll probably go into short the pops mode thinking that this uptrend is ending and that we have, I think the path of least resistance then becomes to the downside. And the same thing about the energy sector, right? Let's see if we can just look at a weekly here. Yeah. So anything below 65.50 or whatever, let's look at the exact level. 65.48. Below 65.48, and I'm looking to short pops on the energy sector as well. I don't want to talk about it too long. We talked about it a lot last week and the weeks before, so you guys should already know the ideas there. The bull trend has been beautiful, textbook. Everything holds when it's supposed to hold. Everything trends the way it's supposed to trend. But if we're in a bear market and this is going to lose June's lows, like the S&P is going lower and Nasdaq's going lower, if we don't hold June's lows, eventually these sectors are going to pay the price too. Okay. Yeah, so those are your sectors. That's the sector analysis, and we'll jump right into the ideas for the week, and then we'll be done, okay? So long setup, strong stocks looking for continuation. Some of these are going to look really familiar because some of these were from the special situation plan last week. Remember, what I'm talking about now is day trades, okay? These are not for the bigger picture ideas at the moment, okay? So first name is Etsy. And the one thing I like about Etsy, one, it's into the levels we were watching, right? That 93 level is what we want, okay? So I'm I had it on watch last week. And because I had it on watch last week, I was staring at it on Friday. And the only thing I could think of on Friday was while everything else was getting smoked, this thing just kept going sideways. It could not break down, right? So I still want a flush to get long. Like I would love 93, maybe lower. I just think it had a lot of relative strength to hold those levels all day Friday. But if we push above 98, I'm looking to buy flushes back into probably like the 96.50 area. Okay, and I'll just play risking probably Friday's lows. Again, this is more of one of those just observations, watching it on Friday, just literally being like, watching everything else break down and then watching little Etsy just hold. Okay, so that gets me interested. It's a key level, so it makes sense, right? The next idea is RIVN, which again was from last week. Okay, you gotta love that it held that quarterly pivot so beautifully, and that it was also it's just a key level, right? So any kind of flush versus Friday's lows, if it gaps up, I'd probably be looking to buy a flush into 33. You can look at the intraday. 32.80 is what I really wrote down. A lot of times, guys, I round. When I say 33, the reason is I want to play against this little late day turn, right? The Friday late day rally. Play against that level instead of playing against this 31.70 area. But if we don't gap up, then I would try to be looking maybe 32.20, somewhere where I can get pretty tight risk and look for higher lows. And that's it. That's it for strong stocks looking for continuation. Why? Because there's not a lot of strong stocks out there right now, guys. Face it, it is what it is. Now, yes, there's some that are trading near 52-week highs. Maybe there's some that have just got a beautiful chart. But remember, to end up on my list, they got to have liquidity and range. So there's a lot of charts out there that just don't trade enough volume or have enough range to really have my attention for day trades, guys. So that may be a question you guys have had in the past. Like, I wonder why he doesn't talk about whatever stock. Go look at the average daily volume. If it's less than 2 million, I don't care about it. If the average range is less than $1.50, I don't care about it, right? Because I'm trying to get day trades. Next section is oversold reversion setups. Quite a few names look oversold right now. I'm going to give you just a few, right? Remember, I just want to keep it to quality over quantity. The first one, you're going to recognize this one too, is JPM. Remember, the idea for the bigger picture anticipation trade was I was interested into the 112, I think it was 112-ish was where we were watching. And if you draw a line straight across, you can see those levels, right? But remember what I said in the beginning of the prep. You just because you want to anticipate, you got to have a setup. And if you look at intraday, there's just never been a time where this thing could really make higher lows and then break and make highs. It was just lower high, lower low. So there just hasn't been a setup yet. But that doesn't mean I'm taking it off watch. I still think there's a really asymmetric trade in here, and I'm just being patient for it. So right now, the day trade idea, remember, this is not bigger picture. The day trade idea is verse Friday's lows. I'm looking at 108 with risk under 107. So, about a point of risk if we can start to hold this 108 area. Now, because it was one of those ideas on the bigger picture plan, if it works as a day trade, you have the ability to lock profits in and leave a runner on that can be the beginning of that bigger picture swing idea. And if XLF, the financial sector ETF, holds Friday's lows, we may end up with that rally. We may end up with the ability to have that bigger picture idea on, but it all stemmed from a day trade, right? Hopefully you guys understand that. Next idea is Oracle, another one that was on. Now remember, this was on last week's scans. Basically, we were watching for the sellers to exhaust. But then, of course, we had the FOMC on Wednesday, which made that push up, bagged all the people that were the buyers, and it slammed back down, right? So now we're right back into some really key levels, right? You can draw this line straight across from June's lows. So it's very, very black and white, very asymmetric in my opinion. And I'm not guessing a level here. I'm just waiting for the trend to reverse. Like, all you need to do is see higher lows and higher highs and then figure out where you're comfortable risking against and let the trend work on a name like this. Because when this has the reversal, if the market bounces, something that is this oversold to the downside and into these key levels has so much meat on the bone, you don't got to be first one in. I promise you guys that. Real quick, I just remembered RIVN was the example I wanted to give you guys. Remember when I talked about these failed breakouts? In a bear market, when you see a key level, you see this line here, these were the previous highs. When you see a failed breakout like that and it can't close above it, it's almost, I swear, this is the money setup. You just play short versus those recent highs and look at the fade it gave. It's not just this, like, you see this over and over and over in names in this bear market. RCL was another one. RCL right here, what was it, September 19th, took out September 15th's highs, but could not close over them. And all you had to do was get short the next day versus those highs, and it gave the whole move back. Dude, there's example after example of these failed breakouts, and I feel like we're kind of getting into the later innings of this bear market. I could be wrong. If we lose June's lows and start to really unwind, keep looking for these setups. But this is my favorite setup for the short in a bear market. And like, I swear, it's etched into my memory that, like, I'll never forget this, right? Anytime I see a stock break above highs, Roblox was another great example. Look at this Roblox right here, where this day right here, August 11th, breaks these highs and just sits back, can't close over them, gave the whole move back. Look right here, September 15th, breaks these highs. Let me see if I can just grab this tool real fast. Breaks these highs, can't close above them, gives the whole move back. I'm telling you guys, it's my favorite setup on the short side in a bear market. I absolutely just love it. Let's get back to what we're talking about. The next idea in this oversold reversion setups is Zim. This one, I'm playing versus Friday's lows. What did I write down? 24.30 is where I would like to snag some. And you can see that's that, like I said, that Friday late day rally level, right? Instead of, any kind of flush back into 24.30, and you get about 40 cents of risk. And when you look at the daily chart, you realize risking 40 cents for a possible really big move up on this name, And this is the kind of move, this is the kind of stock where if you nail this entry, if you spot this turn, there's so much meat on the bone that you should actually be looking at some of this, at least partial of your position, as a swing. Because there's no way that the whole move up is happening in a single. I can't say there's no way. Yes, this could rally and just go straight to 28 in a single day, but I think it's more likely that you spot the turn, you get long 24.30, 24.40, and we get a close around 26. And if you sell into the 26 push over the next few days, you're gonna possibly watch this thing just work its way up into the 28s, 29s, 30s, and you're like, why did I feel like I nailed it on, taking it to 26 when the writing was on the wall that this had potential to go much further up? All right. All right, that's it for long setups. Short setups. Weak stocks looking for continuation. PayPal, I'm looking for 90, I think I wrote 90 to 91. Yeah. So any kind of pop up into this 90, 91 up level, right? Like you can see the 90s here, 89, 90, and then some levels up here around 90, 90.8. Any kind of spikes up into those levels, I'm looking to fade. That is PayPal. Next idea is DLTR. Now, every time I put DLTR on my watch list, it does the exact opposite. So, guys, this one, I obviously have not had a very good read on it the last 2 times it made the prep. But, disclaimer or caveat, every time I've been wrong about it, it never presented the trade, so there was no harm, no foul, right? There was never a reason to actually put the trade on. Up here, we were looking for a long if we got over 170, over these highs, right? That would have been a long trigger to take us higher, and they had a huge gap down on earnings, and so there was never a trade. I think it was over here. I was looking to fade it if we ever lost this 150, 148 level, I think, if I recall correctly. Maybe it was even these 152s, but we never did. So there was never a trade. But I do really think that the way it's just holding this 20-day when it pushed up into it, here's your failed breakout, right? We tried to break above September 19's highs and sat back. I'm looking for a break under Thursday's lows to get short in anticipation of the break of these levels here. I think under 136.50, and this could really unwind. I don't think these September lows hold if we get below 136.50. So I'm looking for, a break under 138.50, or let's go look at the actual prices. Let's call it under 138.40, and then I would be looking to short pops in anticipation that this is going to go test 136.50, and then you can lock some in there. If it breaks that level, you can add back in, but I feel like there is a trade setting up here. Yeah, so that's DLTR, and take it with a grain of salt because this very well may just rip above 146 and start climbing, and next week you guys can all laugh at me. It's fine. The next idea in this section is GM. What did I write down? 39s. Any pop back into 39, I'm looking to get short GM. It's not going to be something that happens. And here's another for the shorts. This was my thought process. I'm looking for a lot of these. You'll recognize the levels I'm wanting to short against are the FOMC levels, right? FOMC sent us, tumbling where they scooped. Everybody thought it was a long, and then it stuffed and rolled over. So those areas where they stuffed on the FOMC push, that's where I'm looking to short against, right? So any kind of pop up into that 39 level on GM. The next idea is MOS 53s. You got the 50-day, the 200-day, your weekly 20, and your 20-day curling down. Just a lot of congestion up there. I just think any kind of pop back into 53 is a big fade on MOS. TTD, any move into 61. Look at this level, right? The monthly pivot, it was the short trigger after having this failed ability to break higher. It's the FOMC levels. Actually, this one, FOMC levels, the stuff level was the 200-day. But I really, really think 61's the level on TTD. I have no problem stopping out if it wants to keep pushing through, or I might not even put the trade on if the author's not showing me what I need to see, and I'll revisit it verse 64. But 61's where I want my attention. If TTD pushes into 61, I want to know about it. that's it for weak stocks looking for continuation. The only other section I have is overbought reversion setups, and this one is not like overbought in the typical sense that I usually talk about it, but we've talked about it plenty. I've been stalking it, and I think it's ready, and that is FSLR, and I think it's bigger picture. And look what we have, guys. Lo and behold, the failed breakout on, was that Wednesday? Was that the FOMC that caused it? Let's go look. It's funny that, yeah, it was definitely the FOMC push that shoved it higher. It's stuffed. And so here's the thought process. I've been stalking it. Why did I think these levels were worth stalking? Well, we talked about it the first week it made my prep. And it stemmed from these levels way back where we had a failed breakout. Failed breakout, and then the ensuing short trigger. Let me go back here. So here was your failed breakout. The very next short trigger was right here. This push up, and then the break. This level was 137.10 was the lows, okay? It was only retested really a few times way back in 2011, and now we're pushing back up into those levels. It's the first retest of those areas. And look at, on a weekly time frame, you start to realize just how big this move up has been into key levels. And now you're getting this kind of topping action with a failed breakout. So basically the thought process here is, you know, like I said earlier, our job as traders, identify the turn and then play against it. So I'm looking 133.50-ish as the first level. You can just draw a line straight across through these levels here where you see all the support that it was. It kept holding. So any kind of push from the underside, you can see it already stuffed once, right? After we lost it on Thursday, the first push up into those levels stuffed, and then we gapped down. So I'm looking 133.50-ish. And then the next level for me is going to be probably this 137.70. But this is bigger picture for me. This is not a, there probably will be a piece of it that's a day trade. But if I put this on and it starts to work, you got to be looking at the higher time frames to see just where this can come. You know, granted, I think you'd be smart to lock some in on a retest here, this 123 area, which if you're short from 133.50 is 10 points. But the weekly 20 is so far down here. Obviously, this could take weeks to kind of work its way down. So this could just keep creeping up a little bit. But I think eventually we go and retest that weekly 20. So that's kind of the game plan for this week. Yeah, I'm gonna see if there's any questions, and then we'll wrap up and we can enjoy some football. Can you share your thoughts on SHOP and SE? This is Nikki Jackson asking. SHOP and SE. So, I mean, I'll look at the charts. Again, I always prefer people kind of give me what their idea is on it, and I'll see what they're trying to see on it. Okay, SHOP. If I was going to put SHOP on my watch list this week, it's just the short pops. Any kind of pop up into the 20-day, you can see these really key levels too that it just recently lost. So any kind of spikes back up into these levels would be where I'd look to fade it. I'm probably not trying to get long this name. It's been super weak and just had this weekly short continuation trigger. So look, sideways. The weekly 20 catches up. The push into the weekly 20 stuffs it. Try to push again, stuff, and roll over lower. That's a recipe for an unwind. What does that remind me of? That reminds me of the Bitcoin chart we just looked at, right? The weekly 20 catching up as we just channel sideways, finally run into it, and then roll over, right? So that's kind of what I see with SHOP. SE, same thing, right? Right into the weekly 20, push down, tried to push up again, broke those lows. This really could unwind. Plus, I think we just recently lost those lows, right? Let's look at a daily. I wouldn't short it here either, though. I think you got to be patient for pops. But yeah, I don't like these kinds of charts that are super, super weak. I'm looking for something, if you're trying to be long, I'm looking for something that's holding levels and behaving much better than this one. So Cook says, when anticipating these extremely asymmetric trades, what are some of the things you look for to time the entry? I frequently see the opportunities, but just sit on the sidelines because I struggle to find that signal that screams push the button now. It's literally just the author telling you. It's not, I mean, let's go look at one of the charts. let's look at Etsy, or not Etsy. Let's look at one like JPM. Okay, JPM. No reason to get involved now. It's just fading off. But in order for this downtrend, like let's just isolate this from here to here. This has just been straight down, straight down, straight down. You'll see if you only look at daily charts, it's going to take a long time for you to see this start to show higher lows, right? It's going to take some time for something like this to happen, right? And put in that higher low. This takes, at minimum, this takes 2 days, right? You got to have 1 day of push up, and then you got to have another day that pulls back and can hold, right? So that's 2 days of staring at a daily chart to try to spot the possible turn. But this cannot happen until it first happens on the lower time frames, right? Let me get rid of those. Okay, so here's a 20-minute chart. Pushing up into the 20, fall down. Push up into the 20, now we're above it, right? But and Cook's in True Trader, so he should already know this. But I'll entertain it because I think it's a good learning point for everybody else. So even though we're through this 20-minute 20, let's see what other levels. We're pushing right into the hourly 20. So when we run into this hourly 20, look what has happened every friggin' time. It just rolls over lower. So we kind of have to assume, since we're in a downtrend still, that that's what's going to happen on this push up. Now, we've already put in a turn. This is a turn. Literally, you've already got it. Let me find my drawing tools. Okay, here's your turn. So if this stock is going to go higher, this is what needs to happen first. So we have that, right? Now the problem is we're already right up into resistance. So we're not trying to be a buyer up here. We want to play against the turn. Now, here's the thing. This is in hindsight, but trust me, we watch these live every day in True Trader, and we talk about them. We discuss them at length, okay? This turn was preceded by a turn on an even lower time frame. It's the only way it can possibly happen, right? So let's look at, and I know people are gonna be like, damn it, Ricky, why are you looking at such a low time frame, right? Let me try to show you guys with, here's a 1 minute chart where I take all the indicators off, right? So we can just look at some things. All right, so this is a 1 minute chart. As long as this is coming down and riding this 1 minute 20, this cannot turn. Once we reclaim and start to push, we have the ability to head higher on this time frame. But what will it be running into? It's going to be running into the 5 minute time frames resistance, which look what it did. It literally pushed right into the 5 minute 20 and then headed lower. So the only way for this to reverse is to finally then reverse on a 5 minute time frame. How does it do that? Well, the first thing that has to happen is it has to stop making lower highs and lower lows. Where does that happen? Well, here's your push up. We try to go lower, right? Look at this, lower high, lower low. We try to roll back over, but we fail to do so. And in turn, this is where that reversal happens. Now, willing to bet, that is exactly the same spot we were just looking at on that 20-minute chart, right? Let's go back to the 20-minute. Boom, same level. Higher low, higher high. So you have the turn. It's right there. All you have to do now is figure out where can you get long versus your risk, right? You're not wrong unless we lose Friday's lows. That's why you kept hearing me during the prep say, I want to play versus Friday's lows, because a lot of these put in turns. So we've identified the turn. Now your job as a trader is ask yourself, where is it asymmetric enough? Because once you have the turn, now you're starting to have the probabilities in your favor. Remember what we said. You have to give up some of that win rate in order to have a asymmetric trade. You can't get a 10-to-1, 5-to-1, 4-to-1 trade and have an 80% win rate, right? Because you have to anticipate. But this is the ability to anticipate on lower time frames and still have that asymmetry to the trade if you're zoomed out and looking at just how far this can actually rally, right? If we were to buy this somewhere into these levels, like a 108 flush or somewhere into this congestion area with risk under 107, remember that was the plan from the prep. I would like to buy a flush in a 108 with about a 1 point of risk. Why? Well, because 108 was the turn. Well, actually 107 is the turn and 108 was the confirmation. So we want to buy a retest of that level with risk under the lows. Now your risk is defined, but you're also stacking the probabilities in your favor. And as long as you have the ability to look at a daily chart and just see how far down we are into key levels, you can see how asymmetric it is. So very, very black and white, very, very objective way of looking at things. And, you know, you just have to study these charts enough that, like, to me, Cook, it sounds like what your issue is confidence or conviction. And that, you know, that can only come from seeing this play out enough times that you stop hesitating to hit the button when it's time to hit the button. All right, so hopefully that clears that up. I hope you guys took some value away from this. Remember, I won't be here doing the Sunday prep next week because I'll be in Vegas for Traders for a Cause. Keep in mind the bigger picture, the ability to anticipate, but the reasoning why we haven't anticipated yet is that there hasn't been a setup. When there is a setup, then we are able to put capital at risk. Stay safe out there. Join True Trader if you don't understand these things so we can get you caught up to speed. If you guys need to learn how to actually objectively read a trend, I'm your friend, guys. I think the code is all caps YouTube. You get 20% off your subscription to True Trader. Dude, you can ask anybody that's in there. We have hours and hours, and you probably couldn't watch all the content we've put out in there if you spent a year straight watching it. We do live streams every single morning for the opening hour of the day where we literally live stream our trading, calling out the trades, talking about what we're looking for, watching the scanners together. You'll be hard pressed to find a better community out there, guys, that provides more value. So hopefully you guys come over and check us out. There's a 5-day trial for $30. And if not, I'll just see you guys in the markets on Monday tomorrow. Peace.